Hey everyone, welcome back to the channel, your number one source for income-oriented investing. I got a very special guest with me today. I'm very excited. First time on the channel, Laura Lau, who is the Chief Investment Officer or Lead Portfolio Manager at Brompton. How are you, Laura? Thanks so much for taking the time. How's it going?
It's great, and thank you for having me on your channel, Adrian.
Yeah, I always love having new, portfolio managers, especially a chief investment officer. It's always, Chris and Michelle have been on the channel many, many times, and they're great. But you're actually a portfolio manager, so you're there, you're picking the stocks, you're managing the portfolio. So I always love talking to the actual portfolio managers, and it's going to be great. So today we're going to focus on a specific sector, the sustainable power infrastructure sector, which I know you guys are very, very bullish on right now. We'll talk about that. So we're going to focus on PWI. So PWI, in case my audience doesn't know, I'm sure most of them know already, is a split share fund that basically invests in stocks that are related to sustainable power and infrastructure stocks. I'll just share my screen really, really quick here so everyone could just see. This is what we're going to be talking about today, mostly PWI here. So why don't we just start, Laura, by telling me the general premise objectives of this fund here?
So basically, we had this fund to help manage the energy transition. So there's many ways that we think the energy transition will happen, and we want to invest in that in an enhanced manner for our unit holders. So there's a number of themes. So number one, of course, is sustainable power. So that's
Hmm.
really replacing fossil fuels with renewable energy, solar, wind, hydro. And another theme we have is green transportation. So really reducing emissions from moving goods and people. So that's, electric vehicles, pipelines, hydrogen. Another one people don't think about is energy efficiency. We have to find ways to use less energy. So for instance, buildings in Europe, they actually consume half the energy. So we need to find a way to have better materials, such as insulation, better heating, better, cooling and heating processes to reduce waste. The other thing we need for energy efficiency is we need better electric grids. We haven't invested enough over the years. And renewable energy like wind and solar, they're farther from major cities and they're intermittent, which means what happens when the sun doesn't shine and the wind doesn't blow. So we need to build new projects, more redundancy, so that we can handle, say, extreme weather events like, those Florida hurricanes or those Texas power outages. And then our fourth theme is communication. We need to increase connectivity so we can reduce energy usage. So when you think about if we work from home, we're
Yeah,
not driving. And just like here, we have this interview. I don't have to fly over to you. You don't have to fly over to me.
yeah, it's a
And that
long flight for me. Yeah.
and that reduces energy.
Okay, so yeah, I did notice, and we'll talk about the stock selection. Obviously, that's a very important part of it. A little bit later, we'll look at some of the stocks because I noticed that it's actually very diversified within that big infrastructure umbrella. But first, let me ask you, why are you guys so bullish and excited about this sector right now? And we're gonna look at the stocks, we're gonna look at the performance as well as PWI. But you guys are very bullish on this side. You like this sector a lot right now. Why is that?
So the reason we like the sector is there's been a lot of government support, especially during COVID. They announced over $3 trillion in green stimulus around the world. Like Europe had two acts. In U.S., we had the American Rescue Plan, 350 billion, the infrastructure bill, another 550 billion, and the Inflation Reduction Act, almost another 400 billion. And now that money is starting to be spent. So
Hmm.
that's very important. So that's why it's now. And the other thing is green energy used to be very expensive and it's now competitive with fossil fuels. The technology has improved and the costs have come down. And the other reason I think over the last year that the sector has been hotter is we realize that there's not enough infrastructure for artificial intelligence. So artificial intelligence, they're starting to build a lot of data centers, and these data centers, they require new infrastructure build, a lot of energy, and a lot of cooling. So right now, they're trying to source energy, preferably that's green or on a path to get there. Like, for instance, people don't know Amazon bought a nuclear power plant.
Wow, really? Well, they need a lot of energy, I'm assuming, right? All the
Yes,
warehouses and stuff. Data
yes.
centers too, because they have AWS as well.
Hmm.
Yeah, interesting, interesting. Okay, so you guys do see this as a long-term, more of a long-term play in the future as well, not just short, medium term, but long-term as well. So that makes sense. Let's look at some at PWI now in detail. Let's look at some of the stocks in there. So What I noticed right off the bat, and this is the typical Brompton way, very nice diversification. Although this is kind of sector specific, you have diversification within the sector itself and regional diversification as well. You have the regional diversification here. So there's industrial stocks, there's energy, industrials, energy, utilities make up the most of this fund, but there's also materials and some technology. So can you talk to me a little bit about how you choose the stocks that go into this fund? Are there certain stocks you're very excited about? Are you constantly monitoring to put new stocks in, or do you have a firm set list here? So tell me a bit, the stock picking, which you're the portfolio manager, you're the perfect person to speak with, and I'll just show some of them here.
So basically, as you said, we're actually very active.
Hmm.
And basically, the more themes you tick off, the better. So maybe I'll just start talking about some of our bigger names. So for instance, Hitachi. Hitachi plays into a number of the themes. So for instance, they actually build those electric vehicle chargers. So that plays into green transportation. They also help with those electrical grids to make them so they're more consistent, they're more efficient, and they don't go down when there's any weather events. So Hitachi plays into a number of those things, and they're looking at also enabling hydrogen for transportation. So Schneider is another great company. So what they will do is they'll help monitor your carbon dioxide emissions, and they consult for you and they tell you how you can reduce your emissions, and then they sell you products to do that, whether it be software to help monitor your buildings or more electronics to make that happen. So that's a great company that does that. So another one that's probably not that well known is Constellation Energy. They're basically the biggest utility in the U.S. that concentrates on nuclear power. So there's been a nuclear renaissance. And with this nuclear renaissance, we're seeing more and more of, as you said, AWS, Amazon, a lot of these data centers. They're looking to power their data centers. And how do they do this in a green, sustainable way? So one thing people don't think about is, number one, these chips run really, really hot.
Yes.
Need a lot of cooling, and that's what Train up there does. It helps with their cooling. And then what they also want is they want less CO2 emissions. So, definitely nuclear is the perfect solution for that. So they're negotiating with them to try to have nuclear power, because what happens when these chips run very hot and you don't have the cooling for them, like say the power goes down, you get explosions. So what they're doing now is actually building a diesel generation for 3 times the capacity. So
Interesting.
instead, they want to contract with a very steady producer of green energy.
Yeah, yeah, I'm looking through the names here. So these all seem, I recognize a lot of them. There's a lot of blue chips in here, like you mentioned, a lot of utilities, green energy, or in that area. There's also a lot of electric utility companies in here that I'll recognize, some energy companies. There's even a railroad. So this is very diversified within the sector. So are you stock picking specific companies and sectors that, how could I say this, are going to be involved in the transition in the future, involved in some sort of way? I mean, CP, for example, or you have, energy companies, Motorola, utility companies. So are you picking and choosing ones that are kind of going to have a piece of this pie going forward? I don't know if I'm making sense. My
So
question.
definitely, we take a long-term view and think
Okay,
these
yeah.
companies will definitely benefit from the energy transition. So Motorola Solutions, they basically do a lot of the infrastructure for, say, your 911 calls and such. And at Williams, they do a lot of natural gas, because we think that's going to be part of the solution going forward. It is a transition fuel. So, and one thing that people don't realize is, I just saw Williams last week. Williams, they build a lot of those electric transmission lines as well. It's
Yeah.
not just a natural gas company. So that's part of that infrastructure build too.
Okay, okay, perfect. Yeah, really nice diversification. Obviously, you guys are, I know that you meet with management teams of certain these companies. You're in tune with the stock. So I always like active management, because it's like you're paying a fee for a reason, right? And people get to trust you, and because you obviously you're in tune with what's going on in terms of stock picking and the future. So one very interesting thing before we talk about the performance, which of PWI, which has been phenomenal. PWI is a split share fund, so this is a more complicated fun type of fund to understand, but it's actually very special because it is a closed-end fund. So sometimes it could be trading at a discount or a premium. Usually they trade at premiums, but right now, PWI is trading at a very, very sizable discount because the net asset value, which per share, which is essentially the intrinsic value of one share of this split fund here, is 858, but on the market you could buy for much cheaper. You could buy for about 10% cheaper. I was very surprised. It's very rare that I see a split share fund trading at such a big discount. And by the way, in case you want to calculate it yourself for the viewers watching, you take the stock price or market price, divide that by the net asset value, do -1 times 100, and you'll get a -10%, which means that it's trading at a 10% discount, right? You're buying something at 767, for example, if we're using the May 10th date, but it's worth 858. Why do you think PWI is trading at such a big discount right now, presenting a great opportunity for investors?
I think part of the reason it's trading at such a discount is because the performance has been so good and they haven't realized it. So basically the trading price hasn't caught up. So we find that this dislocation happens every so often when, the underlying portfolio just does very well. And just to give you, an idea, since inception, PWI has in general traded as a premium. 72% of the time it's traded as a premium and average premium of 6.2%. So it's highly unusual
Yes.
that it is trading at such a discount. And on top of that, we think it's a great opportunity. Not as it only such a big discount, you're getting over a 10% distribution rate, and you can participate in further upside from, we think, some of these major themes.
Yeah, so this is a split share fund. If we're talking, of course, about PWI, which is the Class A shares. There are the preferred shares, which is PWI.PR.A. But the Class A shares are discounted very heavily now at about 10% discount, which, Chris Cullen was on the other time, and he explained it best. He basically said, whenever you could buy a dollar for 90 cents, you're getting a good deal. It's exactly that pretty much dynamic here. Let's talk about this crazy good performance in the last little while here. So you could actually see, and this is of course, split share fund Class A shares are leveraged. So if something goes up, it will go up even harder. You clearly see that. I mean, I was very, very surprised to see this in the last year, 41% return or increase total return. That's in the last year. Why do you think that, the performance has exploded? That's number one. And number two, do you think this could continue in the future?
I think it's done very well, as I said, because the energy transition, I think we're starting to see it play through. And I think that it's also been a way for people to play artificial intelligence. So before it was NVIDIA, and then it was
Yeah.
Microsoft, it was tech, and now they realize that, that AI trade is starting to broaden out, and they see that the next trade will be that we need these data centers, we need the energy for these data centers, and we need the infrastructure. So I think
Right.
that's it's starting to, really outperform.
It's a very interesting point. So this is kind of like a side play on AI. It's like the infrastructure. I mean, AI needs all those chips, all that energy. So this is kind of an AI play also, if you think about it as well. I mean, it is sustainable power and energy. And like you said, very, very high distribution rate of over 10% right now, trading at a 10% plus discount, very nice yield, very nice performance as well. So this is a very, very interesting fund, but some people might not be comfortable with leverage per se. I certainly am. I mean, you'll obviously have better performance if they go up over time, but you guys also have an ETF. So if ever some people are not comfortable with the split share fund or that more complicated structure, you do have the BREA ETF, which is, very similar name, Sustainable Real Assets Dividend ETF. And I did look, and I saw a lot of the same stocks. I saw a lot of the, sector breakdown, top three sectors: industrial, energy, and utilities. There's also some real estate. So can you talk a little bit about this ETF here, BREA? Is it also actively managed? I see active here. So how, what's the difference between this one and PWI? Is it similar theme, you would say?
So as you said, it's definitely an actively managed fund, and
Okay.
it's similar in the sense that there's a lot of infrastructure in their utilities, and part of the reason is this is a real assets fund. So the way we define it is basically things you can touch and feel. So you can touch
Right.
infrastructure, telecommunications, but we also added oil and gas companies and real estate to help hedge inflation. And as I said, we do regard those as real asset companies. So it does help to hedge inflation. And one of the big differences, as you said, it's an exchange traded fund, so there's no leverage, and with market makers, so it tends to trade at net asset value.
Right. So one question I had is regarding the covered call writing. So the BREA ETF, Laura, this is it says active, but there's also covered calls. And I believe even with PWI, there's some covered calls. So I've spoken to Chris and Michelle several times about, Brompton's view on covered calls and how they're used more tactically, and you guys are more interested really into the total return more. You're looking more into total return. So now that you have the portfolio manager, tell me of your view on covered calls. How do you use them? How are they used in PWI and the ETF as well?
So Adrian, as you said, we take a very active view of the covered call program, and it's a way just to add a little bit more income. So for instance, part of the reason we are able to get such high returns is that we do tend to write out of the money calls, and we can flex that. If we think a stock is going to go up a lot, we don't write as much, or we write more out of the money, because we don't want to give up a lot of upside. Especially, you've seen that the volatility actually has been very low now. The VIX has been low, so you're not paid as much to write calls. When the volatility is higher, we step up the call writing and get more income for our investors.
Okay, so would you say that PWI, it's more of a total return fund? That is the top priority versus income? Like you said, the calls are they always out of the money? Are you always writing out of the money because you believe in the stocks?
They typically are out of the money, or sometimes they can also be at the money. But they typically are out of the money because we do believe in those stocks.
Okay.
And everything is actively managed, and we have all of our analysts who cover the companies and the sectors also do the call writing on the stocks.
Okay, perfect. So it's an active approach. It's not a rinse and repeat, set in stone approach like some of these other ETF providers. You're using it more like a tactical tool to boost the income, but you're still mindful of the total return as your top priority. Do I have that right?
Yes, that is correct. And sometimes we'll even use a call program to say, we think this stock is worth so much, and if it gets called away, we just let it get assigned. So we also use it to give us discipline in selling.
Okay, yeah, that's cool. That makes sense to me. So perfect. Thanks for explaining that. Really appreciate it. Right, very, very interesting here. So yeah, that's awesome. And by the way, in case my audience is, I'm sure they know, this is my personal opinion here, personal favorite products that you guys have is BMAX. This is your all-in-one ETF, your multi-asset, 70% equity, 30% fixed income. There's a little bit of leverage in there, but it is an ETF. It's not a split share fund. And it holds basically other Brompton ETFs and products. And one of them is the BREA ETF, right? It's a 10% holding. So a lot of great options here to get exposure, either directly or indirectly to the transition, all this infrastructure, all these great infrastructure stocks, which you're monitoring and you're consistently, looking which ones are going to play a part, which I find really interesting. It makes sense to have active management on something like this instead of something passive. So, well, I really appreciate your time. Obviously, this is a sector that's typically considered, I don't know if you'll agree with this, as a defensive sector, because it's something, kind of like utilities. It's something that we need, like you said, we could touch and feel, and we absolutely need. Would that be a good characterization? Would you consider this kind of sector a defensive sector of interest to more defensive investors?
It is typically a more defensive sector, but I do think that it's a big long-term theme that we know is going to happen for decades, because it does take decades and decades to build energy infrastructure. Yeah. So again, this fund will be in play for decades and decades because it takes a long time and a lot of money to build all of this infrastructure.
Yeah, very interesting. So you kind of got a couple of great things here, guys. I'm talking to my audience here. I strongly would suggest taking a look at PWI. I know a lot of people in my community have said, why is it trading at such a big discount? It is getting noticed. So I appreciate you confirming this and telling us why. And 10% plus yield, 10% discount, defensive sector that we'll need in the future to come. This is a great buy and hold play, in my opinion. And if you're not comfortable, there's also the ETF as well, which is also in your all-in-one BMAX. So, 3 great ways to get access to this sector. So Laura, I appreciate your time. Hopefully you come back on the channel to talk more about other specific products from Brompton. That would be really great. If there's anything you wish to add or anything I forgot, feel free.
No, I think you did a great job of summarizing everything, Adrian. Thank you.
Well, that's perfect. I appreciate that. And take care and we'll talk soon, hopefully.